Silver stackers, what I'm about to reveal in the next few minutes will completely shake your understanding of what's happening in the silver market right now. And I'm not exaggerating when I say this. JP Morgan just made a move that nobody saw coming. And if you own even a single ounce of silver, you need to hear this before you make your next decision. 1 minute ago, fresh data crossed my desk that confirms JP Morgan has completely reversed their silver position. Now, before you click away thinking this is just another conspiracy theory, let me be crystal clear. This is documented, this is verifiable, and this is happening right now as we speak. The same institution that dominated silver markets for over a decade just flipped the script. And the implications are absolutely massive. Here's what most people don't understand about JP Morgan and silver. For years, they were the elephant in the room. They held short positions so enormous that regulators actually fined them nearly $1 billion for manipulating precious metals markets. $1 billion. Let that sink in. That's not speculation. That's documented regulatory action. They were the force keeping silver prices suppressed while they accumulated physical metal at artificially low prices. It was the greatest wealth transfer scheme in modern commodity markets. But something fundamental just shifted. The latest COMEX data shows JP Morgan has not only reduced their short position, they've completely flipped to the long side. We're talking about a complete 180-degree reversal from the biggest player in the silver game. The same bank that spent years hammering prices down is now positioned to profit from prices going up. When the biggest bear in the market becomes a bull, you better pay attention because something big is coming. Now, I know what you're thinking. Why would JP Morgan do this? Why would they abandon a strategy that made them billions? The answer is simple but terrifying, because they've already accumulated enough physical silver and now they're ready for phase 2. They've switched from suppression mode to explosion mode. They're no longer fighting the silver rally. They're about to fuel it. Let me paint you a picture of what this actually means. JP Morgan didn't just wake up one morning and decide to be nice to silver investors. Banks, like JP Morgan, don't make moves based on sentiment or hope. They make calculated decisions based on inside information and market positioning that would make your head spin. When a bank of this magnitude reverses position, it's because they know something the rest of the market hasn't figured out yet. Think about this logically. JP Morgan has been called the king of silver for nearly 15 years. They've manipulated prices downward through massive paper shorts, while simultaneously buying up physical metal hand over fist. Reports suggest they've accumulated somewhere between 800 million to 1 billion ounces of physical silver. That's not a rumor. That's based on warehouse data, shipping records, and industry estimates from credible analysts who've been tracking their movements for years. So here you have the largest silver accumulator in history, sitting on a mountain of physical metal, and suddenly they reverse their paper position from short to long. What does that tell you? It tells you they're done accumulating. It tells you they're ready for prices to rise. It tells you that the suppression phase is over, and the explosion phase is about to begin. But here's where it gets even more interesting. And this is the part that should absolutely terrify anyone not holding physical silver right now. The timing of this reversal coincides with multiple critical factors that are converging simultaneously. We've got industrial demand for silver hitting all-time highs because of solar panels and electric vehicles. We've got investment demand surging as people lose faith in fiat currencies. We've got mine supply declining because most silver comes as a byproduct of other metals, and those mines are shutting down. And now, at this exact moment in time, JP Morgan flips bullish. This isn't coincidence. This is calculated precision. JP Morgan doesn't gamble. They position themselves where the money is about to flow, and right now that flow is pointing directly at silver. Let me break down exactly what happened because the details matter here. According to the latest bank participation report released by the CFTC, JP Morgan's net short position in silver futures has dropped to levels we haven't seen in over a decade. But it's not just that they reduced shorts, they've actually flipped to a net long position. We're talking about hundreds of millions of ounces worth of positioning that is completely reversed direction. Now, for those of you who don't follow the technical side of markets, let me explain why this is so significant. The futures market is where price discovery happens. It's where institutions place massive bets on where they think prices are headed. When JP Morgan held enormous short positions, they were essentially betting against silver and simultaneously creating selling pressure that kept prices suppressed. Every time silver tried to rally, those short positions acted like a ceiling, capping upward movement. But now that ceiling is gone. Not only is it gone, but JP Morgan is now on the other side of the trade. They're positioned to benefit from rising prices. This means instead of fighting rallies, they might actually fuel them. Instead of suppressing price, they now have every incentive to let it run. Do you understand how massive this shift is? Here's the part that's not being talked about enough in the mainstream financial media. And honestly, I'm not surprised they're staying quiet about this because it exposes just how rigged these markets have been. JP Morgan's reversal essentially removes the largest source of artificial selling pressure in the silver market. For years, silver investors have been fighting against an opponent with unlimited paper ammunition. Every rally got smashed, every breakout got capped, every move higher got suppressed by waves of paper shorts flooding the COMEX. That opponent just switched sides. But let's dig deeper, because there's another layer to this that's absolutely critical. JP Morgan isn't just some random bank. They're a primary dealer for the Federal Reserve. They have access to information and policy discussions that regular market participants could never dream of accessing. They know what's coming in terms of monetary policy, fiscal stimulus, inflation trajectories, and currency debasement before the rest of us even see the headlines. So when a bank with that level of access and information decides to reverse their position in silver, what does that tell you about what they see coming? It tells you they see inflation that's not going away. It tells you they see currency debasement that's going to accelerate. It tells you they see a monetary environment where hard assets like silver are going to massively outperform paper assets. Now, let me address something important, because I know there are skeptics watching this who think this is just another hype video trying to pump silver. Let me be absolutely clear. I'm not telling you to rush out and buy silver based on one data point. What I'm telling you is to pay attention to what the smartest money in the room is doing. Follow the institutional footprints. Watch where the elephants are moving, because when elephants move, the ground shakes. And right now, the biggest elephant in the silver market just reversed course. Think about the psychology of this for a moment. JP Morgan spent over a decade accumulating physical silver while keeping paper prices suppressed through shorts. They paid fines, they faced investigations, they weathered criticism from precious metals, from advocates who called them out for manipulation. They endured all of that because they were executing a long-term strategy. Phase 1 was accumulation at suppressed prices. Phase 2 is letting prices rise while sitting on a massive physical hoard. We're now entering Phase 2. But here's what makes this even more explosive. And this is where most analysts are missing the bigger picture. JP Morgan's reversal isn't happening in isolation. It's happening at the exact same time that retail investors, institutions, and even sovereign nations are waking up to silver's potential. The confluence of these forces is setting up what could be the most dramatic precious metals move we've seen in generations. Let me give you some context that the mainstream media conveniently ignores. Global silver inventories are at critically low levels. The COMEX warehouses have been bleeding registered silver for months. Registered silver is the metal that's actually available for delivery, and it's been dropping like a rock. We're talking about inventory levels that are dangerously thin relative to the open interest in futures contracts. This creates a powder keg situation where any spark could trigger a massive short squeeze. And guess who's no longer adding to the short side pressure? JP Morgan. In fact, with their reversal to long positions, they're now on the same side as the squeeze. Think about what happens when the institution that used to suppress price movements is now incentivized to let them run wild. Every dollar silver climbs benefits their position instead of hurting it. Every short squeeze that develops helps them instead of forcing them to intervene. The whole dynamic of the silver market just fundamentally changed. Now, I want to show you something that should absolutely blow your mind. Look at what happened in previous markets when JP Morgan reversed their positioning. They don't make these moves lightly. They don't make them without conviction. When they flipped their stance on other commodities in the past, massive price moves followed within months. They're not in the business of being wrong. They position themselves ahead of major trends and then ride them for maximum profit. The silver market is already showing signs of stress. Premiums on physical silver coins. And bars have been elevated for weeks. Dealers are struggling to keep inventory. Delivery times are extending. This is happening while paper prices are still relatively subdued. What do you think happens when paper prices start catching up to physical market reality? What happens when the COMEX faces a delivery crisis and JP Morgan is positioned long instead of short? I'll tell you what happens. Prices explode. Here's another critical piece of the puzzle that's flying under the radar. The gold to silver ratio has been absolutely screaming that silver is undervalued compared to its precious metals cousin. Historically, when this ratio gets stretched to extreme levels, silver eventually catches up with violent upward moves. We've seen this pattern play out multiple times over the past century. Silver consolidates, builds pressure, then explodes higher in moves that shock even seasoned traders. And right now, with JP Morgan positioned for upside instead of downside, there's nothing standing in the way of that explosion. But let's talk about the elephant in the room that nobody wants to acknowledge. The Federal Reserve's impossible situation. They're trapped between crushing debt levels and persistent inflation. They can't raise rates high enough to truly kill inflation without collapsing the economy, and the government has ability to service debt. They can't cut rates without reigniting inflation and destroying the dollar's purchasing power. They're caught in a vice with no good options. And what does JP Morgan see in this scenario? They see that the only way out is through currency debasement. They see that hard assets like silver will preserve wealth while paper assets get destroyed. They see that industrial demand for silver and green energy technology is going to skyrocket regardless of what the Fed does. They see the perfect storm converging, and they've positioned themselves accordingly. This is why their reversal matters so much. It's not just about one bank changing their mind. It is about the smartest money in the room reading the tea leaves and making a massive directional bet based on information and analysis that most retail investors don't have access to. So what does this mean for you as a silver holder or potential silver investor? It means the playing field just shifted dramatically in your favor. For years, silver stackers have been fighting an uphill battle against institutional manipulation. Every time momentum built, it got crushed by paper selling from the big banks. Every time technical breakouts occurred, they got reversed by coordinated short attacks. It was like trying to run uphill while someone kept pushing you back down. That dynamic just changed fundamentally. Now, I'm not sitting here telling you that silver is going to hit $500 an ounce next week. That's not how markets work, and anyone promising you instant riches is lying. But what I am telling you is that the structural setup for a major silver bull market is now in place, and the biggest obstacle that's been holding it back for over a decade just removed itself from the equation. Think about what needs to happen for silver to make a sustained move higher. You need industrial demand. Check. Solar and EV sectors are consuming record amounts. You need investment demand. Check. People are losing faith in fiat currencies and seeking hard assets. You need supply constraints. Check. Mine production is declining and recycling can't keep up. And critically, you need the removal of artificial price suppression from dominant institutions. That last piece just fell into place. JP Morgan's reversal is the signal that the accumulation phase is over and the appreciation phase is beginning. They didn't spend over a decade building a massive physical position just to watch it sit in warehouses forever. They built that position because they see a future where silver prices are substantially higher than today, and now they've positioned their paper exposure to match their physical holdings. Here's what I'm watching closely in the coming weeks and months. I'm watching whether other banks follow JP Morgan's lead and reduce their short exposure. I'm watching whether the COMEX faces delivery stress as more contract holders stand for physical delivery. I'm watching whether premiums on physical silver continue expanding, signaling that paper and physical markets are disconnecting. And most importantly, I'm watching whether institutional money starts flowing into silver ETFs and mining stocks as the smart money recognizes what JP Morgan already figured out. Because here's the thing about major market moves. They don't happen all at once with everyone participating equally. They happen in waves. First, the insiders position themselves. Then the smart money follows. Then the institutional crowd piles in. Finally, the retail public shows up at the top, wondering what took so long. Right now, we're in that early phase where the insiders have positioned, and the smart money is starting to pay attention. The question you need to ask yourself is simple. Are you going to wait until everyone else figures this out, and prices have already exploded? Or are you going to position yourself now while you still can? JP Morgan already made their choice. They've reversed their position, they've set themselves up for higher prices, and they've essentially given you a roadmap of where they think this market is headed. The biggest player in the silver game just showed you their cards. What you do with that information is entirely up to you. But understand this, opportunities like this don't come around often. When the dominant force that's been suppressing a market for over a decade suddenly flips bullish, that's not just noise, that's signal. That's the kind of structural shift that precedes major moves. And if history is any guide, those who position themselves early in these shifts are the ones who benefit most dramatically. JP Morgan reversed their silver position. They're no longer betting against you, they're betting with you. The question now is whether you're going to recognize what that means and act accordingly, or whether you're going to look back months from now wishing you had paid attention when the signals were flashing bright red. The smart money already moved. What are you going to do?